Hey, fellow traders, it is Reginald Ringgold, founding partner of Rose Gold Investments, as well as the brand ambassador to something that I'd like to introduce to the world, the Forex Force Indicator. It's been under development for quite some time now, but I've been working with the group that has developed the indicator, and we've made it possible to bring it out to the trading community. This is a revolutionary indicator because it is going to do what the normal trader would take 30 minutes to do in roughly about 30 seconds. A lot of times when we're looking at trading Forex, we want to seek out the strong currencies with the weak currencies. So what Forex Force does is it does the work in finding what is strong, putting it against what's weak, and then putting it in a chronological order so that you're able to see where the movement is, where it demands your attention most, and where you should focus your attention relative to what's moving. A lot of times traders, when they're going about trading in the markets, they look at things based on a fixed routine, or moving what I call moving to the beat of their own drum, so to speak. That means that they may do a fixed order of how they look at certain pairs. They may go about looking at every day the dollar first, looking at the euro US dollar first, then looking at maybe the pound dollar second, and then Aussie dollar third, New Zealand dollar fourth. Now what that does is it puts you in a situation where on some days you may end up being in the right place at the right time, and then on days when maybe the euro US dollar or the pound dollar isn't really moving in a manner that can allow you to get in and then move to a target, you're kind of left sitting on hands. So this wonderful indicator always puts you in the right place at the right time. It also takes it a step further by giving you the direction, the bias. So if we move here, moving forward, you can see the actual indicator in action, and you see here over to the left axis, you'll see that there are pairs, and the pairs are broken down in a chronological order from strongest, biggest mover to the weakest, or that's not necessarily weakest, but you can say the slowest mover, the one moving with the least velocity. So if I'm taking a trade based on, movement, and I'm trading as a day trader, for instance, or a short-term swing trader, I need movement. I need to trade something that is going to move within the short time horizon that I need. So what this does is it tells me who's the strongest, who's the weakest. In this scenario, I know that the New Zealand dollar is the absolute weakest currency pair today at the moment. The Canadian dollar is the strongest currently at the moment. So this tells me that these are the ones that demand my attention now, but it also tells me the bias that I can apply when looking at it. It gives me daily, weekly, monthly, month-to-date, quarter, half-year, year, and year-to-date. Now if you look at this, it doesn't take a rocket scientist to be able to determine what direction it's moving in. If red means bearish, short, trade to the downside, green means bullish, go long, buy to the upside, and yellow is neutral, means it's sideways basing or consolidating, then it lets you know that you may want to back off of a sideways action unless it's at the right portion of the range, and engage long when you see green, and short when you see a majority of the time frames being bearish or red. Now in this particular example, you can see New Zealand CADs, the main focus of our attention, and you can see that we have 1, 2, 3, 4, 5, 6, 7. 7 of them are red. It's been in a downtrend for a significant amount of time. The weekly, right now the weekly is somewhat sideways, but you know that the day and the month happen to be majority bearish. So I would look to short this particular currency pair, or try to find an opportunity for me to get short on the chart based on my reasons for entry. If I'm a retracement trader, I'm going to be probably forced to wait for the daily to turn green, showing that it's retracing into my particular area I want to short. But if I'm a trader who's going to trade a breakout, I can take it and engage the trend and short based on where I like to get in, based on my particular strategy that I use to implement and trade the markets. But the beautiful thing is, it will keep you from trading in the wrong direction, or trading something that does not demand your attention. For instance, if I look here, pound Aussie, you can see that you've got all 3 time frames, daily, weekly, and monthly, are sideways. So there's no real direction, no real force in control. No bulls or bears, neither bulls nor bears are in control. So it's kind of neutral, so to speak. Going down to here, for instance, this is a very clear-cut decision for me to go in and short because I know that the euro is very weak and the Canadian dollar happens to be strong. So going down to the bottom of the indicator, you'll start to see things start to get more yellow because these things down here are moving with a slower velocity. They aren't moving with as much momentum. The problem that you face as a trader is if you're the type of trader who's going in and you're looking at things in your order, you may end up looking at, let's say, the euro pound or euro yen, for instance. Let's say euro yen first is the one that you choose to go to because that's your favorite pair. Well, if you look at euro yen, it's not moving. Even worse, giving the example of euro Swiss, we know why that doesn't move much because spreads are wide, margin requirements are a little wider ever since we had the unpegging of the Swiss from the euro. But you can see for the most part that, you know, this is something, if I didn't know the fundamentals of why I wouldn't trade it, as a new trader I could see I don't want to focus on this because it's primarily yellow. Here, this is something that's kind of a mixed bag, so to speak. I might stay away from this as well because I'm currently bullish, the weekly is bearish, the monthly is neutral. Now if I'm a day trader and only day trader, I could focus, if I'm short-term trading, on being bullish because the daily is right now bullish. Okay? The moment that we go red, then whether I'm day trading or swing trading, I can develop a bias that's in line with the current lower time frame and higher time frame. So the biggest thing is you're able to assess where to focus and its bias relatively quickly. So to recap, the majority green, I go long. A majority red, I short. If it's more yellow, I'm going to take a pause and just take a back seat to see if I can see which side is going to start to gain control. I really only need 3. All I really need is 3 time frames to really focus and get my bias. If I got 3 that are red, I know what to do. If I got 3 green, I know what to do. 3 green, buy. 3 red, sell. But in order for me to be bearish or bullish, all I have to do is have 2 green to be bullish, 2 red to be bearish. Now, I want you to think of this as a GPS map of sorts. This is kind of like a speedometer gauge, telling you what the speed as far as which it's moving. But you still have to go to the chart to determine if this is in line with what the chart is showing. The chart may show you there's something in your way that's going to keep you from taking it bullish even though there's a bunch of green. So the chart is the end-all be-all. Obviously, I may have a mixed bag and be aggressive, and it could be red, green, and yellow. And then I can say I'm going to lean either way and let the chart be my guide. But what's most important is, regardless of the bias, you know that if you follow the order of what's moving first, you're going to be in the right place at the right time. This is Reginald Ringgold, and I'd like to say good night.